Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. It was another news-filled week in the weed world. Harvest Health and Recreation acquired Chicago-based Verano Holdings in an all-stock deal valued at $850 million. Nelson Holdings, Deloitte, and Headset are partnering up to provide market insight for cannabis businesses. Tilray appointed Andrew Purcher, a former managing director at Goldman Sachs, as its chief corporate development officer. And the prices keep climbing for cannabis companies. Hexco said it was willing to pay $263 million for New Strike brands. Acreage Holdings said it paid $11 million for one dispensary in California. And over the last 5 trading days, their Horizons Marijuana Life Index ETF gained 5%, while the ETFMG Alternative Harvest ETF rose roughly 4.6%. Here are some of the top cannabis stocks with a market cap above $400 million in the U.S. exchanges. Acreage Holdings was up almost 15%. Afria flat. Aurora Cannabis up 24%. CanTrust Holdings 7.6%. Curaleaf Holdings up 8.7%. Green Thumb Industries up. In other news, Canopy Boulder, a business accelerator and venture fund for ancillary cannabis businesses, raised over $4 million for its most recent fund. The capital will be used to make investments into 10 promising businesses operating in the legal cannabis industry. Each company accepted into the accelerator program will receive up to $130,000 mentorship, critical resources, and introductions to industry experts and investors in exchange for a mixture of equity and convertible debt. Aurora Cannabis' stock recently popped after bringing on a promising new strategic advisor named Nelson Peltz, who worked with an investment firm called Trian Fund Management. This is one more instance of the cannabis industry normalizing as a noted billionaire activist investor jumps on board. Aurora says it's going to work with Peltz on both a global expansion strategy and to, quote, to explore potential partnerships that would be the optimal strategic fit for successful entry into each of Aurora's contemplated market segments. This is only one noted billionaire, but as we see people leave their jobs at Goldman Sachs or this fund management, Fortune 500 companies, politicians, it's just a matter of that snowball rolling, and it's legitimate. You wouldn't have people just jumping if they didn't believe that it had a long-term legalization and implication. There was too much at stake if they're going to risk their reputations and their funds and leave. So it's a good sign. Right now, there's arguably no hotter industry on the planet than cannabis. It's been reflected in the valuations of nearly every cannabis stock. And since the year began, well over a dozen of the most popular pot stocks are now up more than 50%. A quick review into the industry provides evidence on why cannabis stocks have been unstoppable. In just the past 6 months, Canada became the first industrialized country in the world to legalize recreational cannabis. Additional U.S. states gave the green light to medical cannabis, pushing the number of states that have now legalized in some capacity to 33. And Wall Street analyst coverage have commenced with some lofty price targets. So according to a report from ArcView Market Research and BDS Analytics, the global cannabis industry generated $12.2 billion in sales last year. However, investment bank Cohen Group foresees the industry growing to $75 billion by 2030, with Jefferies seeing an outside opportunity of the industry reeling in $130 billion annually at its peak. At $130 billion, the cannabis industry would essentially double the size of the global soda industry. So in these lofty forecasts, along with triple-digit sales growth, that have investors piling into these cannabis stocks. A lot of people are comparing cannabis stocks to Amazon as the hockey stick price just goes skyrocket. But with the exception of a very small handful of cannabis stocks, nearly all of them are losing money. So in some cases, a lot of money. But the need to ramp up capacity, build market, recreation, or medicinal brands, research new products for adult use and medical purposes is laying the foundation to move into an overseas market or make acquisitions that has pretty much doomed every major cannabis stock to an ongoing operating loss. In other words, the industry is a fundamental nightmare. You look at fundamental indicators in terms of what their market cap is relative to revenue, and you'd be frightened, except nobody really cares. They're just kind of piling in. But they have billion-dollar market caps, meaning valuations. They're worth billions, but they're only generating millions. So there's quite the difference. But nobody cares because it's a nascent industry. So anytime anything comes on board, it can skyrocket. Bitcoin did the same thing. It also corrected heavily. Anytime anything comes on board initially, it's going to go skyrocket or hockey stick straight up. But there has to be fundamentals. You have to have, your price to earnings. You can't have an excessive price if your earnings are low. So ugly income statements aren't stopping cannabis stock investors, because we've supposedly seen a scenario play out before with Amazon. So Amazon lost copious amounts of money in the late 90s and throughout the 2000s, but it built itself into an e-commerce giant. It continually reinvests a majority of its operating cash flow back into the business in order to emphasize long-term growth over short-term profits, and the results show. So for the first 6 months of fiscal 2019, Aurora had lost 192 million Canadian dollars on an operating basis. But because the company has been on an acquisition bench for more than a year now, it's vaulted to the top spot in terms of projected peak annual production. Cannabis stock investors who love leaning on the Amazon comparison are also overlooking a huge gap in comparable market size. Even assuming Jeffrey's extremely lofty estimates of 130 billion in annual sales is correct, keep in mind that Amazon is part of a $6 trillion US retail sales industry and doesn't even factor in its cloud computing services. So according to Gartner, worldwide public cloud services revenue is expected to increase by more than 17% to 206 billion. And it doesn't even include sales potentials for the private cloud. So to summarize, Amazon currently operates in an addressable market of more than 6 trillion, while cannabis industry can one day hope to maybe hit 130 billion in annual sales. And that's just flower though, that's just cannabis. I think if you look at the ancillary market in terms of how many jobs are affected because of cannabis, that's going to be much higher. So whether it's glass or vape or some new technology, there's going to be tech and otherwise services, more attorneys, more accountants, more bankers. So that number is going to be affected as well. It's not going to, I'm not arguing that we should look at this Amazon model, that it's okay to lose money in the beginning as you expand and grow. But obviously the Canadian shareholders are putting up with that same thing in Canada, as MedMen and some of these other producer processor LPs up in Canada are expanding and merging. They may be operating at a loss, just like Amazon did, but Amazon is able to sell anything they want online, whereas there's limits to the cannabis industry. So to summarize, Amazon currently operates in an addressable market of more than 6 trillion, while the cannabis industry can one day hope to maybe hit 130 billion in annual sales. Most pot stocks don't have multiple sales channels. So to build on the previous point comparing the two industries, you're ignoring the fact that Amazon has numerous channels of revenue. So Amazon can make money with e-commerce or Whole Foods or Prime Services. Comparatively, cannabis stocks don't really have many ancillary revenue channels. They can sell a variety of cannabis products or perhaps partner with brand name beverages, snacks, tobacco, pharmaceutical companies, but they won't have that revenue breadth that Amazon has. Initial winners may not have staying power. Who we see now may not be around in 5 years. I would argue that brands haven't even begun to establish. If people don't understand CBD, they're not going to understand your brand. So I would argue that we're in the very, very beginning of branding. So there's a long way to go. Initially, the winners aren't going to have long-term staying power. There's going to be a lot of consolidation. So the rise of internet e-commerce reminds us that initial leaders aren't guaranteed to stay around forever. So there was a time when Netscape Navigator was the preferred internet browser, or eBay was the e-commerce destination of choice for online shoppers. So change is commonplace within a fast-growing industry, and there's little guarantee that companies like Aurora Cannabis, which looks like a leader now, are going to remain on the top of the pack for long. So long story short, just because Wall Street tolerated an ongoing loss from Amazon doesn't mean they're going to tolerate it very long from the cannabis industry. Caveat emptor, buyer beware. Canada's finding out what the rest of us already knew, which is that recreational cannabis isn't the cash cow that the government had hoped for. This month, the Canadian government sent the first cannabis excise tax payments to the provinces, but almost none of the amounts were disclosed. It's likely because the checks were smaller than officials had expected. British Columbia is the only province so far to disclose its tax revenues, 1.3 million for October to December of last year. It had expected 50 million total this fiscal year, but now will be lucky to get 3 million. Other provinces haven't disclosed their receipts. Manitoba didn't even mention cannabis revenues in last week's budget. Health Canada data showed producers sold 20 tons of medical cannabis last quarter. They also apparently shipped 42 tons of recreational cannabis to distributors. The federal cannabis excise tax portion is 25 cents per gram or 2.5 cents of wholesale value, whichever is higher. So this implies that Ottawa received some 16 million in excise tax last quarter. During that period, Statistics Canada says legal cannabis sales totaled 307 million. 5% federal goods and service tax would have generated 15 million from that. This suggests Ottawa earned about 31 million in tax and excise taxes on cannabis last quarter. Adding the federal and provincial numbers gives a Canada-wide total of some 96 million. That's 62 million from excise taxes and 34 million from sales taxes. Put it another way, 59 million came from recreational cannabis and 37 million from medical. So what do you think about this potential compromise? To remove an excise tax and sales tax on medical purchases, but only for cannabis oils. Dry, smokable cannabis would remain taxable, as would cannabis edibles when they eventually arrive. I don't know, what do you think? New Frontier Data just released new tax incentives for cannabis companies. They cite the recent passage of the 2018 Farm Bill, which descheduled industrial hemp and its derivatives. The new law, combined with the pending bipartisan bill, strengthening the 10th Amendment through entrusting states, is paving the way for cannabis-related businesses to be treated like any other agricultural business. The impact of Section 280E on the Internal Revenue Code has put some cannabis companies at a disadvantage relative to non-cannabis businesses. Yet the passage of the 2018 Farm Bill results in hemp cultivators and hemp CBD manufacturers no longer being subjected to Section 280E at the beginning of the 2019 tax year. As we get closer to the tax season, we need to dive into 7 quick tips to help you maximize your cannabis tax benefits. Knowing the rules can help your business operate with reduced tax obligations. Trying to understand the tax laws as it relates to the cannabis industry can make one dazed and confused. It's critical to understand the right ways to construct the ownership of these businesses and know the tax rules in order to reduce the taxation implications for investors. There are 7 tips cannabis business owners should take into consideration when investing. Number 1 is be prepared to pay a high tax rate. Since all the expenses other than the cost of goods sold are disallowed, your effective tax rate is high. And in fact, the tax could exceed the gross profits, meaning your business could lose money and you still have to pay taxes. Number 2 is maximizing your cost of goods sold. An often overlooked component is the addition of Section 263A. This enables a portion of certain costs to be converted into inventory. Number 3 is understanding how to allocate your expenses for cost of goods sold. Number 4, not all entities are the same. Because of the basic rules, C corporations work better tax-wise than partnerships. Number 5 is to consider a non-traditional business arrangement. A C corporation is also a favorite amongst investors to put all of the financing or investment into an umbrella or a holding company, and then each entity, whether it's an LLC or otherwise, is underneath that. So you have a THC and a CBD and maybe a branding entity all housed by the investors. It also might bypass SIN clauses where an investor or investment group aren't able to invest into the cannabis entity directly, but can invest into the holding company that owns that cannabis entity. So C Corp is good. Number 5 is consider non-traditional business arrangements. So looking for strategic partnerships, you might be able to find somebody that can manufacture your product and then sell it. And when they do, then they can pay you back. Although in Washington, they're looking at that arrangement and starting to stop that. So a lot of the producers would trade that flower to a processor for a finished good and then be paid as soon as the retailer paid the processor, and then the producer would get paid. That model is changing, but in a sense, it's the same concept of a strategic partnership where you're looking to leverage somebody else's assets or their part of the business that you don't have funding, capability, knowledge, or otherwise. Number 6 is to diversify your business and moving away from just selling cannabis. Number 7 is to capitalize on investment opportunities. Knowing the tax rules for allowing recovery of a portion of non-cost of good expenses and structuring one's investment are critical. An investor working side by side with a trusted tax professional can develop optimal strategies for minimizing taxes. There are a lot of tax challenges for cannabis companies, and so here are 6 ways to maximize deductions and stay compliant with tax regulations. Cannabis companies are known for exploring multiple product ideas and business opportunities before finding their sweet spot. Most fast-growing companies are tasked with balancing a constrained budget while providing the appropriate amount of funding to support product development, talent acquisition, and a positive culture that aids in employee development and attention. However, in addition to funding challenges, cannabis companies and ancillary organizations supporting the industry are tasked with additional record-keeping, tax exposure, and financial obstacles. The cannabis industry is growing at a rapid pace, yet companies continue to face the dichotomy of reporting illegal income at a federal level while reporting legal income at a state and local level. This causes an unfair disparity in tax burden as well as differences in reporting between the federal and state local levels. These differences are highlighted under the IRS Internal Revenue Code Section 280E. This Section 280E requires the reporting of income from illegal sources at the federal level. 280E started with Miami drug dealers writing off their yachts and other Schedule 1 controlled substances, and so the laws implemented this 280E to not allow Schedule 1 illegal businesses or drugs to be written off on your taxes. So in the simplest terms, companies that fall under Section 280E can only deduct expenses for cost of goods sold, but Section 280E companies not permitted to deduct wages, rents, or repairs, general business expenditures, or marketing costs. Essentially, only the cost of growing the plant can be deducted. Because non-cannabis companies can deduct all expenses related to the business, if that business incurs a loss, will have no tax liability. However, if a cannabis company has a loss, it may still have a significant federal tax bill to pay. Furthermore, the company is required to use an accounting inventory method to be able to deduct the cost of goods sold. In order to meet the requirements of Section 280E and provide for solid tax, cash flow, and financial planning, there are several different ways in which a company can maximize its deductions and ensure compliance with the code. Number one is to understand the implications of Section 280E and the short-term and long-term consequences of incorrect or sloppy records. So while reporting expense deductions incorrectly in the short term may minimize your tax liabilities, it could result in substantial expenses in the long run, including increased tax liabilities, penalties, interest, and significant legal costs. Number two is ensuring the books and records are in good order and that cost tracking methods are an accurate reflection of all of the activities of the business. Setting up a solid transfer pricing methodology that accurately reflects business activities from inception ensures that the maximum allowable cost recorded as cost of goods sold and ultimately reduces the federal tax burden. Number three is preparing and maintaining separate books and records for Section 280E activities and non-Section 280E activities to provide for the maximum allowable deductions. Maintaining separate records for each business will allow non-Section 280E businesses to accurately deduct all allowable expenses related to their activities. Number four is maintaining and accounting for research and development expenses. All R&D expenditures fall outside of Section 280E. If an organization conducts cannabis activities and R&D, be sure to keep an accurate accounting of all of the costs of the R&D. Number five is maintaining all costs associated with cultivation. Most costs around cultivation of the plant are part of cost of goods sold and can be deducted. Number six is make quarterly estimated tax payments throughout the year to reduce the risk of tax penalties incurred and interest accrued when tax returns are due. So even if the company is showing a loss, a potential tax liability must be regularly reviewed to determine the need for an estimated payment. In the event of a tax liabilities are not paid through the tax year, penalties and interest may be assessed. But how do you navigate the tax maze and the impacts of 280E and cost of goods sold? With tax deadlines rapidly approaching, there's a flurry of questions around legal cannabis companies with confusions from the tax code arising from many reasons, and the current tax laws for legal cannabis companies are extremely difficult to navigate. So first, the federal and state laws are very significant. Second, federal law taxes for legal cannabis companies are substantially different than those for non-profit businesses. Most importantly, the federal tax laws make it very difficult for legal cannabis companies to generate a profit due to the heavy tax burden that's imposed. So let's dive into the dreaded 280E. As states legalize cannabis, these companies are treated like other for-profit businesses at a state level. However, the federal level, cannabis companies are still considered illegal. Hence, the dreaded 280E of the federal tax code comes into play. The heart of the Section 280E sets forth the tax code for businesses that are associated with trafficking Schedule 1 or Schedule 2 drugs, according to the Controlled Substances Act. Because cannabis is still a Schedule 1 substance, the state legal cannabis companies must report their income as illegal at the federal level, and it triggers a series of tax rules that must be followed. So reporting under 280E starts with classifying income as illegal on the federal tax return and also disallows the majority of expenses associated with legal cannabis companies. There's confusion over what's disallowed, but simply it means that most businesses have to pay taxes on their net income. However, for legal cannabis companies, only the cost of goods sold are permitted for deduction. However, costs associated with distribution, sale, administration, management, promotion, advertisement, overhead, and support are not allowable. So these include rent, shipping, most employee expenditures, most contractor expenses, legal, management, accounting, overhead, compliance, etc. So for most companies, costs that don't fall into the cost of goods sold comprise a large percentage of the overall cost of the organization. Paying taxes on gross profit creates a significant tax burden, which in many cases makes the company unprofitable. So what can cannabis companies do to minimize their tax burden? The first step is to have an intricate understanding of 280E or hire an accountant who's well versed in this area. The next step is to keep an accurate and complete financial information. In the event that your deductions are scrutinized, you'll need to not only produce good financial records, but provide a sound basis for what expenses fall into cost of goods sold versus non-cost of goods sold expenditures. Make quarterly tax payment, assist with an annual tax burden to reduce the risk of penalties. And if a legal cannabis company produces multiple products, then an accurate and complete book of records should be kept for each product. Utilize Section 263A of the Internal Revenue Code to allow for indirect expenses to be allocated to cost of goods sold under a defendable allocation methodology. So it's important to work with a knowledgeable accountant to set up that appropriate allocation method. This will allow for the company to allocate a certain percentage of indirect expenses as cost of goods sold, which will help minimize the tax liabilities. Finally, develop a solid system to track expenses by category. So for example, all cultivation costs are deductible. However, if records are not appropriately maintained, you may lose the deductibility. So until there's a shift in the tax law, legal cannabis companies need to continue to follow the strict tax code. And while Section 280E puts legal cannabis companies at a disadvantage, they can minimize their tax burden by following these steps outlined above. But for long-term success, the industry must advocate for fair tax laws so these businesses can prosper and grow. Recent court rulings complicate the already difficult tax code for cannabis businesses. With the entire cannabis industry running scared of Internal Revenue Code 280E, what else can the IRS possibly do to make it even more burdensome? In a recent case, the IRS had made clear its intentions when it comes to dispensaries. In previous cases, non-cannabis business activities such as selling merchandise and having a non-cannabis business operations was well and good, but now it's gotten even more complicated and confusing. In a recent IRS case that was upheld, it was due to an extreme lack of records. The cost of non-cannabis items were disallowed. So in this case, it was based on the plaintiffs applying for a tax refund and being denied because of IRC 280E was once again upheld in court. According to the IRS, simply having a non-cannabis activity is not enough. For example, if you're selling merchandise, the sales activity from those revenues may not be enough in relation to your total gross revenue to be allowed for deductions. So if in the opinion of the IRS it's not enough, then it will be considered a separate activity and the IRS may deny all deductions. Yet the IRS did allow depreciation expenses in this case. So how is it possible? So we're not sure if the IRS would allow Section 179 depreciation or regular depreciation. In either case, it's very peculiar to allow this expense when 280E clearly states it would not be allowed. So in addition, to make things more absurd, if the merchandise you're selling has your logo or brand related information on it, the IRS may consider this advertising and disallow the cost of goods sold for those purchases as well, in addition to any payroll or cost allocated expenses to those sales. So it seems as though the IRS is on a power trip to exert its authority by any means possible. The sad part is the courts have ruled in its favor, which is very disturbing. There are things you can do to help mitigate the hostile surroundings. One of the aspects of trying to win a case against the IRS is to have a complete, accurate set of books. In addition, the activity must be done contemporaneously. If a mass journal entry to the end of the year is stuck in QuickBooks, you're in trouble. So more than 95% of the businesses in the industry perform incorrect, poor accounting because of the work isn't done by an accounting professional or someone who's trained with experience. So because of the complexities of accounting and taxes for the cannabis industry, it's critical to have this work performed by somebody who knows the business. Not having your accounting and taxes properly prepared can cost you tens of thousands of dollars in taxes, penalties, and interest. Staying compliant on all state and federal levels is paramount to keeping the door open, and it can be the difference between keeping or losing your business. Canadian cannabis consumer packaged goods firm Slang Worldwide has formed a partnership with Southern Development Holdings to sell its cannabis products in Puerto Rico. Toronto-based Slang granted an exclusive license to SDH to produce the Slang products in Puerto Rico. Under the partnership agreement, SDH would manufacture and sell Slang's products in medical cannabis dispensaries throughout Puerto Rico. Slang will receive royalty payments in each Slang branded product sold in Puerto Rico. The partnership is expected to begin sales in the second quarter of 2019. Puerto Rico has one of the highest numbers of medical cannabis patients per capita of the U.S. territories. As of February 2019, there were more than 59,000 patients in 71 dispensaries, according to the Puerto Rico Department of Health. Puerto Rico is also the only place in the world as an American that you can go and not be forced to pay income tax. So Puerto Ricans are U.S. citizens, but they don't have congressional representation and they can't vote in federal elections. And since there can't be taxation without representation, you don't pay U.S. income tax. Now, Puerto Ricans have their own tax system, but after the last Hurricane Maria, they revised what's called Act 20 and Act 22. There's Act 73 and 74, depending on if you're going to live there or just work there, or if you're going to work on exports or other opportunities. But essentially, Puerto Rico is the only place in the world that you can go and not be forced to pay income tax. So there's a 4% corporate tax cap. You have 50% tax credits. There's 100% tax deductions. And in fact, your first year, everything is tax deductible. So Puerto Rico is probably the number one place in the world for any, let's say, CBD company for now. Puerto Rico is the number one place in the world for any CBD company to do business because of the tax advantages. So you can operate anywhere in the world, have your headquarters in Puerto Rico 6 months out of the year, 183 days is the qualification, but still you can go up to Canada, you can register up there with an attorney and then eventually do a reverse takeover, or if you have more money, you can do a traditional IPO. And so you have all of those advantages of initially being able to have some tax advantages in the U.S. while still looking for additional capital up in Canada and operating in between. So Puerto Rico is definitely a growing cannabis market. Puerto Rico offers reciprocal dispensary access to out-of-town visitors who hold active cannabis medical marijuana licenses from qualified state programs, as well as online registration for those interested in obtaining a medical cannabis permit. Slang is quoted as saying, "We're excited to bring our high-quality brands to consumers in Puerto Rico and the Latin American market. Building global brands requires teamwork, leveraging partnerships with the highest caliber operations, enhancing Slang's brand share and revenue with impressive scalability." And this should come as no surprise that cannabis is the fastest growing sector in the U.S. job market. It's not tech, it's pot. The cannabis industry added almost 65,000 jobs in 2018, an increase of 44% from the year before, according to a new report from the cannabis website Leafly and Whitney Economics. There are now more than 296,000 jobs when you include suppliers and indirect contractors, surpassing that of coal mining, textile manufacturing, and brewery workers. In 2018, legal cannabis sales grew 34% to $10.8 billion in the U.S., according to the report. California has the fifth largest GDP in the entire world. There's only 4 other countries, including the U.S., that have a higher gross domestic product than California alone. So California is leading the jobs creation market amongst states that have legalized cannabis by allowing dispensaries to sell recreational cannabis. The legal market has not only erased the influence of the black market, but legal jobs continue to open up. So the Leafly report projected that California will add over 10,000 jobs this year alone. It's been 5 years since Colorado and Washington opened their first adult use retail stores, and we're just now seeing a slowing in the rate of cannabis growth in those 2 states, the report says. Interesting, because I would absolutely agree that we've been really slow to grow. There's been a lot of turnover, especially in the bud tender group. I think that's due to a lack of training and resources and just maybe finding a better job somewhere else, either closer to home, more convenient, higher sales. But overall, the industry hasn't really been growing in terms of jobs until as of recent. If cannabis job gains follow on a conservative 20% in 2019, that will represent 110% gain in full-time jobs in 3 years. Director of extraction that supposedly makes 191,000 compared to director of cultivation at 250,000, and an outside sales rep makes 150,000. Hopefully this isn't a bad omen to a cannabis bubble, but the article is titled "Forget Bitcoin, Cannabis is the Next Place to Go." Cannabis stocks are the next huge growth area and won't be like Bitcoin, says one wealth advisor. Quote, if you want to be in something that's very growthy and actually legitimate as it is legalized and controlled properly, I think this is the place to go, said Carol Pepper of Pepper International, talking to CNBC's Squawk Box Europe on Friday. The New York Stock Exchange and NASDAQ both listed cannabis companies in 2018 when Canopy Growth and Cronos Capital went public on the indices. Both firms are based in Canada, where recreational cannabis is now legal. Canopy Growth stock has risen more than 65% year to date, while over the same period, Cronos has risen more than 115%. Pepper said legalization in Canada had blown through expectations, and the success had reached the point where firms based there were now exporting to Europe. The wealth manager also rejected a suggestion that cannabis stocks would mirror the Bitcoin frenzy, which saw asset prices spike to the highs of over 19,000 and crash to trades around 3,900 currently, stating that cannabis is a physical product with defined benefits. She said, quote, I think it's a phenomenal plant that's going to do a lot of good for the planet. I'm glad it's finally being legalized. Pepper predicted that big US tobacco and drink companies would take control of the industry once more legal prohibition is removed around the world. Some of the biggest investments are multi-state operators, data, and consumption lounges, but within that, the specific targets have been vape and accurate dosing, as well as beverages. So Constellation Brands threw in almost $5 billion up in Canada. So a lot of money being thrown around. So there's a lot of investment being thrown at infused beverages, as well as healthier alternatives, as kind of the soda market gets not only taxed, but people are just actually maybe looking for healthy alternatives. A lot of these companies are gearing up for Canada to start allowing edibles and concentrate. And so cannabis drinks are hitting the global market, and they're promising certain claims like anxiety reduction, pain relief, better sleep. But one thing is for sure is that a lot more investment is going to come into the space. What will help a lot of these companies is consumption. So whether it's directly at the farmers being able to sell it to the end user, or having a cannabis cafe being able to sample whether it's CBD coffee or a sativa indica, there should be a spot that has an educated individual there to not only educate, but then assist from samples to purchase. Alaska finally becomes the first state to legalize social consumption. Lawmakers in Alaska signed off on new regulations explicitly permitting adults to consume cannabis at specifically licensed retailers. This will go into effect before at 4/20 this year for a licensed cannabis retailer to apply for an on-site consumption endorsement. Local governments may challenge that, and we've seen that in every state where even though it's legal, there's a moratorium or there's some city that just outright bans it. So they may challenge that application in certain instances or initiate municipal votes or limits on site activities. It's anticipated that the initial on-site consumption areas may be approved by this summer. So the difference with Denver or West Hollywood that already have regulated on-site consumption lounges, Alaska is the first adult jurisdiction to establish regulations statewide. So when those rules go into effect, Alaska will be the first state to finalize and approve statewide rules for on-site consumption. They expect more to follow suit, allowing social consumption is sensible from a business perspective, particularly for states with large amounts of tourists who otherwise have no place to legally consume, but also has an important social justice component. Absolutely. A friend of mine with multiple sclerosis had nowhere to go. He was in an adult care facility, and they're obviously subsidized by the government, so he has no place to go. Get a ticket if you go outside. It's unfortunate. Even if you have an apartment, your landlord's not going to allow you to smoke. So there's really nowhere to go. As an adult, you should have the right to consume if you want. It's an inalienable right. We're all adults. By preventing retail outlets and other venues from being licensed and regulated for social consumption, many patients have to choose between effective cannabis treatment for their ailments or being thrown out of public housing. This causes the civil liberties that come with cannabis legalization still being kept at arm's length for low-income individuals and members of other marginalized communities. There's finally a grant program aiming to help economically disadvantaged individuals into gaining access into the cannabis industry. Data from the Sacramento Police Department showed that in 2010, African Americans made up to 14% of the population in Sacramento, but accounted for 47% of cannabis-related arrests. Now that recreational cannabis is legal in California, a new bill signed into law by former Governor Jerry Brown last year is giving people in those same neighborhoods a chance to enter the cannabis industry legally. The California Cannabis Equity Act set aside $10 million for cities like Sacramento to apply for the money. It'll go to people who can't afford the hundreds of thousands of dollars it takes to open up a cannabis store. They want those dollars directly into supporting those people. One of their core policy objectives is removing barriers to entry into the compliant cannabis marketplace. But the questions many of the cannabis industry are asking is, does 10 million split through the entire state solve the problem, or even begin to touch it at all? A lot of people believe that too many regulations and high taxes could be the biggest obstacle for entrepreneurs. Not only have to jump in and compete with existing businesses, but they need to compete with the illicit market. And if regulatory systems and the taxation system doesn't allow them to compete with the illicit market, it's a recipe for disaster. It'll be a true test to see how many local jurisdictions take advantage of the program and whether it actually meets the funding needs of the program. Minorities have absolutely been left out of the cannabis industry green boom. I think whether it's a grant or other opportunity, there needs to be something done to allow and facilitate some additional diversity into the cannabis space. There's been a great start with expunging all of felonies or arrest records, and then we need to take additional steps to help them. There are a lot of minority groups that we need to help out. There needs to be more programs to be able to help facilitate that. If only we had a 6-point plan to help Black equity in the industry. Oh, in fact, here's a report for changing the face of cannabis ownership. California native Tucky Blunt was arrested 15 years ago for an $80 cannabis sale and ended up changing the trajectory of his life. He was slapped with a 10-year felony probation and then legally giving law enforcement officials the agency to search him at any time. Blunt tried to enter the industry on his own, but struggled with the high cost of entry and information gaps that hindered Black people from entering the cannabis business as owners. He was able to pursue his entrepreneurial dreams through participating in an equity program established by the city of Oakland, designed to help residents who were the most harmed by the war on drugs with assistance, support, and resources to step into the cannabis industry. For many people like Blunt and others living in Black communities throughout the country, selling cannabis was utilized as a means for survival. The men and women involved in the underground industry relied on it to provide for themselves and their families. Many of those individuals are sitting in prison cells today, some of them for decades, and they watched the white community capitalize and monopolize an industry that was built on their backs. According to a 2017 report released by Marijuana Business Daily, 81% of cannabis business owners are white only, while only a mere 4.3% are Black. As legalization moves forward in several states, it's imperative that communities most harmed not only have a seat at the table in cannabis industry, but benefit from it the most. There needs to be a social restorative justice. So how do we ensure that there are more narratives of success like Blunt's? How do we guarantee that legislation encompasses social and economic equity, which addresses decades of oppression and unjust criminalization? What do we do to make sure Black folks are the leaders of the cannabis industry rather than only regulated to roles of consumers and workers? It's crucial that the ravaging impact the war on drugs had on the Black community be examined, and regulations that would be instrumental in leveling the playing field in this industry are implemented. Black elected officials in New York say they will block the legalization of cannabis if legislation doesn't prove to be beneficial for their communities. They want to ensure that the Black and brown folks get their fair share of the expected $3 billion in revenue from adult use cannabis and prevent missed opportunities at economic justice, as we've seen in other states across the country where cannabis has been legalized. Inspired by the 10-point program created by the Black Panther Party 53 years ago, which served as a foundation for the ideologies, beliefs, and needs of the Black community to overcome injustice in America, the Harlem Business Alliance has developed a 6-point platform to ensure that the government creates equitable economic opportunities in this industry for Black people and that Black communities are protected from mega million-dollar cannabis entities. Number one, equity applicants. Individuals from communities most harmed who were arrested, convicted, and incarcerated, and their families should qualify as equity applicants. Longtime residents who lived in these communities in the decades prior to 2000 should also qualify. Number two, funding. To fiscally address the damage done, the government needs to provide monetary resources for communities that were most harmed. Number three, tax revenue. All tax revenue from cannabis companies should be allocated to communities most harmed. Every available dollar is necessary to reverse the results of racism, financial and banking redlining, underachieving schools, high rates of unemployment, and public assistance in substance abuse. Number four, convictions. Like Blunt, who was able to overcome his past and step into success in the industry, there needs to be a clear pathway put in place for those who have past cannabis offenses. This includes the expungement of all cannabis-related convictions. Furthermore, there should be no restrictions on applicants who have been convicted of nonviolent crimes to own businesses or license or work in the industry. Number five, equity incubators. The Harlem Business Alliance has been instrumental in educating and empowering Black entrepreneurs. In an effort to increase representation in cannabis business ownership, it's imperative that the government team up with culturally sensitive and competent community-based organizations that have a track record of fostering economic initiatives to be incubators. Providing these organizations with substantial funding one day is an essential component of moving this effort forward. Number six, leveling period. The cannabis industry is moving at a quick pace and we can't afford to leave Black communities behind. There needs to be at least a 3-year period of exclusive licensing opportunity for equity applicants, as well as a 10-year leveling period for Black entrepreneurs with exclusive rights to own and operate a business within the boundaries of the communities most harmed. It's incumbent upon our elected representatives and community leaders to ensure that legalization of adult use cannabis is a transformative vehicle of economic empowerment for the Black community. And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge, your cannabis business podcast. Like, subscribe, and share, or don't, and I'm out.